Good morning, Clifford, the 25-year trader, back with another midweek futures market update starting now. Okay, welcome back. And for those who may not know, I also do a Sunday night futures market open every Sunday night at about 8 p.m. on YouTube. So definitely check that out as well, because a lot of what I go over in the midweek update is what we talk about on Sunday as well. So be sure to definitely check out the my YouTube channel for that. All right. So with that being said, as I mentioned in Sunday night's futures market open, we want to be watching this level on the S&P 500 right here, 66.39. And as we see, it broke that level last week actually, and it dropped to about 65, I think 60 here. But then, as you see, it formed what's called a bearish, kind of like a shooting star candle right here. And I've been watching this candle because this is a bearish signal. You have a bearish close below a significant support level that hasn't been broken since November of last year. Then you have a rally back up to resistance, and then it kind of like just closes below that, right? So if you're bearish, the way I would play this is similar to the last video. You want to probably try to sell it as close to resistance as you can. So if I take this off for a second, we see resistance is right here at 67.50. So what I would do is I would put an order at about 67.50, maybe a little bit lower, like maybe 67.40, about here, you know, and then do like a 50-point stop, maybe up here, you know, and then try to catch the 100-point drop, which is 2 to 1. If you're bearish, if you're bullish, however, I mean, I don't think if it closes above 67.50, then yes, maybe I would start to consider becoming bullish. But the elephant in the room, is this, right? The oil market. And the line in the sand on that, I think right now is 84.38 on this oil futures here. Yeah, 84.36, 84.38-ish, right? If this support level holds, I think that people will be buying this dip right here. You could actually buy this support level at 84, put a 10-point stop maybe, and target these highs. That's actually 3 to 1. So again, none of these are trade recommendations. Trading involves risk, so always, um, you know, always trade at your own risk. But these are trades that some people may try to play if they're going to short the S&P. The best place to do it is at resistance. If you're going to go long oil, the best place to do it is at support, in my opinion. Um, I don't use indicators. I just use support and resistance, trend lines, chart formations, a lot of technical analysis, and most importantly, I also look at the institutions like this, the COT report. This shows you the commitment of traders. What is the smart money doing? Well, here they had 81,000 contracts in January. Then they loaded it 98,000 contracts long. They're long the oil market, 126,000, 169,000, 227,000, right? So they are really increasing their long side in oil. But we have to watch out, because if they get too long, like maybe back here in 2018, 750,000 contracts, then you could see a sell-off. So at one point it becomes overextended long, and then you want to watch out for like the sellers to step in. But at this point, obviously a lot of uncertainty right now. No one has a crystal ball. But in my opinion, the peace talks, I don't think that's going to really hold up. I mean, wars don't end on a dime like that. So yeah, in my opinion, I think this level might hold 84.38. So I'll be watching for that. And then the other thing I talked about on Sunday night for me personally was corn. I was placing a small trade in corn. I bought one position back here on March 17th, put a stop loss below support. It worked out really good so far. So then I did what's called pyramid. I bought a second position here. I'll make a video about pyramiding in the future so you guys understand what I'm talking about for those who are new. But basically, pyramiding means you buy a second position, but you don't risk more. You just move your stop loss to break even on the first position. Then the second position, I'm risking the same amount, but now I'm doubling my profit potential. For example, if I'm trading corn here and I'm risking $100, 10 cents on the, let's say, the mini contract, right? Now the market moves 18 cents, I'm up 200. So when it breaks above resistance, what I would do is I would I would move my break even stop here, but now I load up on a second position here at this level here, which I did at 458. I moved my stop loss to break even here. So now the worst thing that happens is I cannot lose more than $100. I risked 100 here. Now I'm moving the risk to the second position here. Another $100 I'm risking, right? But it's the same 100. I'm not adding more risk. I'm just the worst thing that happens is if let's say corn I'm completely wrong and corn completely hits my stop. What happens? All that happens is I lose $100 on the second position, but the first position is now at break even, so I never lost more than $100. But the beauty of it is I now have two positions in the corn market. So I'm no longer making $10 a tick, but now I'm making 20. And this is how fortunes are made because what professionals like to do, um, which I actually discovered in one of my trading books over the 25-year journey. Um, Professionals pyramid, and basically what they do is they build a larger position in a trending market to take advantage of all the profit potential. And you could keep pyramiding and pyramiding and pyramiding. Let's say corn breaks another resistance level. I'll buy again on another pullback. That'll give me a third position, and I'm still only risking $100. The worst thing that happens is if I get stopped out, I can't lose more than my original risk. It may sound confusing if you're new to trading futures, but I will I'll make a video about it in the future, how to pyramid the market. But for now, for those who are new, just understand that you could build larger positions without increasing your original risk and at the same time increase your profit potential. All right. So last but not least, today's Wednesday. I will be watching this one too at 10:30 a.m. The crude oil inventories. Let's see. Let's see how the inventories come out because that's definitely going to affect the oil market at 10:30 a.m. And other than that, for the rest of the week, Thursday unemployment claims, that it's red, so that could move the market as well. Be aware of that. If you're trading the British pound, watch out for the retail sales, and that's about it. It's pretty much not a whole lot going on this week as far as fundamentals. But yeah, that's about pretty much that was so again in summary, I would say if you're bearish the stock market and you want to try to short it, you know, watch for the retest here at 67.50. That's the level I'm going to short at. Me personally, again, not a trade recommendation. Trade at your own risk, but I will be watching that level. On the NASDAQ, also, same thing about that resistance level right there, maybe at 24,765. On the Russell, same thing. I mean, they're all pretty much going to be in tandem, I believe. And then if for someone who's bullish the oil market, they could buy right here at 84. Put a stop somewhere under support here, maybe at like once again that 75-ish level. Target these highs for that. And other than that, I think that's pretty much it. If you enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And always use risk management. Never risk more than 1 to 2% on any given trade. whether it's your personal account or you're trading a prop firm or any other form, it's the best way to go. Have a great trading week. Good luck, guys.